What your outlook is for earnings as a whole. What makes you pessimistic and of the view that we're likely to see big earnings cut in FY24? Because just this morning, we were alluding to the fact that yes, Infosys may have been a big washout in terms of one of the big tech nifty numbers that came out, but by and large, you can't use the same brush to stroke the entire gamut of nifty companies. It's not across the board. So what makes you confident that we are likely to see those earnings cuts?
So yes, I think let me rephrase myself. Uh, you know, I'm not talking about very big earnings cuts. Going forward, uh, I would say where consensus is today for FY24. By the time we end FY24, we should probably have seen about 5 or 6% earnings cuts, which is par for the course. That's how normal sell side behavior is. What I'm talking about is that the level of earnings growth that we are talking about in India looks reasonably ordinary compared to the kind of earnings growth that we are getting in other parts of the world, and hence for example, over the last 3 to 6 months, other than the technology sector in emerging markets, which is basically semiconductors, etc., which have seen sharp earnings cuts, most other parts have actually not seen cuts. They've actually seen increases, right? While India has continued to see some cuts, right? So that is the visibility and strength that is actually available in other markets. Whereas in India, that confidence on growth outlook and earning sustainability, I think that's a bit weak. So I'm not talking about risk of very sharp earnings cuts, but it's just that the earning growth outlook is not as attractive as it is in other parts.
It's been pretty interesting, and day after day, we're seeing some of these railway stocks, seeing a lot of traction in trade, a lot of progress, for instance, on the Vande Bharat trains, coaches starting production, etc. Wanted to just understand your view on this theme as a whole. How are you looking at the promising prospects that have been doled out by the government for sectors like defense and railways and infrastructure?
Yes, so I think government is one entity that's definitely doing a lot of capex. We haven't found much evidence of private sector and private corporates doing a lot of capex. Neither are there commentaries indicating that a big upsurge is seen. So yes, it makes a lot of sense to look at opportunities in the government capex space. I think our team likes. Without getting into stock names, our team definitely likes the defense area. It likes the metro area, etc. And yeah, we do have positive bias on the industrial space as a whole. And there are some pockets of private capital, corporate capital expenditure, which can lead to some niche opportunities where our team is positive on. But I think at an aggregate level, it's the government space for capex which is really making sense right now.